back. It's been a weak month of November for Bajaj Auto. The total sales have seen a decline of nearly 20% versus last year. Domestic sales are down 4%, but exports continues to be under pressure. Export sales contracting by 30% year on year. Rakesh Sharma, the Executive Director of Bajaj Auto, now joins in. Morning, Mr. Sharma. This is Reema here. Could you explain what happened in the month of November? We understand that there is a base effect. There is also a drop-off which comes, because the festive season was in the month of October for us. So month on month, there is likely to be a drop-off. But even then, a figure just over 3 lakh units is significantly lower, right?
Hello, good morning. But base effect is quite significant. Diwali moved by 10 days, and last year it was in, I think, first week of November, and this time it was in last week of October, and you have the month end in the middle. So the decline is entirely explained by the base effect. So therefore, it's always better to look at this period as a combination of October and November, which is what we always do. And the performance both of industry and of Bajaj is very, very heartening if we take October and November as one period, because then it just sort of takes the base effect out of it. So in the industry has probably grown at about 15% plus, and more significantly, the upper half in the industry, which is the 125cc plus segment, has grown at twice that rate, which is almost about 35%, showing that the higher end customer is coming back rapidly into the consumption cycle. And in this segment, the performance of Bajaj Auto has been almost twice that of the industry. So we are looking at the October and November period as we're quite satisfied with it, both from an industry point of view and from our own performance point of view.
Mr. Sharma, hi, good morning. Prashant here. Overall, for you, rural markets, I mean, is there acceleration, is there deceleration? One. And just a quick comment on whether the stress in some of the big export markets for you is easing a little bit at the margin.
Yeah. So I would say that the rural markets in general have been a little bit muted. They've not come back as rapidly as the urban markets have come. But what is ubiquitous is that the entry-level segment, whether it is in urban or semi-urban or rural, the bottom has fallen out of that segment. The very entry-level 100cc segment. And like I said, the one which has really pulled the industry up is the 125, 150 plus segment. Coming to your second question, certainly there is a decline in the emerging markets, but that decline has, I think, bottomed out. For the last 3 months now, we are seeing a constant level of retails. And in fact, our retails are much higher, slightly higher than what we are shipping out. So we were seeing, this thing tumble down in the period of March, April, May, June, and July onwards. You're seeing bottoming out and a marginal sort of increase in some markets, particularly African markets.
Okay. Hi. Good morning, Mr. Sharma. Well, things are pretty much in the air, actually, because there's a lot of uncertainty. But your competition here in India, that's Hero Moto, they have gone ahead and taken a price increase. Have y'all as well pushed through a price increase in the last 1 month or so? That's point number one. And the second factor is on the supply side. The constraints, they've eased out considerably.
Morning. Yeah, see, we took our price increases in the period of April, May, June, which is when we were seeing most of the raw material indices going up. And we sort of evaluated our stand at that point of time. And we were also seeing that there will be the big months of October and November coming along. And we wanted to do our price increases before some of these high volume months happen, so that we could get the benefit of that and recover the cost increases. As we stand now, we are not seeing cost increases. So therefore, we have not really changed our pricing in the last 1 month or so. Supply chain visibility is much better now, certainly. And the environment has certainly become more and more certain and clear.
So basically, Mr. Sharma, there are three pockets of weakness, right? Exports, where perhaps things have flattened out. The second one is rural, and the third one is entry level, irrespective of which part of India it is, urban, semi-urban, or rural. Can you tell us what percentage of your overall volumes would come in these three brackets, the sectors which have been impacted?
Well, as you know, almost 50% of our sales is from overseas markets. And this 50%, I would say about 60% of it is sort of soft right now, which is really the Africa area. The ASEAN region is doing extremely well. We are seeing, high growth over there. But yes, Africa performance is soft, but we are hoping that, as certainty comes around, it's all related to the dollar movements and what the Fed is announcing and the consequent impact on the currency, the devaluation and the availability of the dollar. But we are seeing some kind of a stability there. And I think that the customers are digesting the higher retail prices. I would say in a couple of quarters, we should see, these markets climbing back to their previous levels.
Go ahead.
And in the domestic side, our focus, our relentless focus has been on the 125cc plus segment. What we've done is we have re-engineered our portfolio, refreshed it, put in new platforms. And from the 125 to the 400cc segment, which is the upper half, we've got probably about 12 different products, which is much more than any competitor would have. So they straddle the entire spectrum there and offer an incredible choice to the customer. And I think it's just at the right time because we are seeing an unprecedented gust of wind, which is supporting the premium level consumption. And with this very wide range, which services almost all sub-segments in that upper half, I think it is very, very well positioned to make up and to offset any weakness which would be there from the entry-level 100cc.
Right. Just one last brief point, Mr. Sharma. The electric three-wheeler, any updates, sir?
Like I said last time, that after our sort of trials and quite immersion with the auto rickshaw users, the drivers, we've gone back to modify our proposition. And the trials are once again on, and hopefully by March, we're trying to do it in this fiscal, but it could be March, April when we would place the three-wheeler electric commercially in India.
Right, Mr. Sharma, quickly, since we're talking about electric vehicles, you're going at a run rate of around 2,000 per month in the two-wheelers. When does it hit 6,000?
Well, we've already touched 3,500. Now that we have really good supply chain visibility, we are launching an expansion drive to enter more and more cities. We are in 37 cities. Hopefully, in the next 3-4 months, we should be in around 80 cities. And that should see a very significant increase in the sales of Chetak from January onwards. So from 2,500, we have come to about 3,500. December will be better than November, and we'll see a really significant increase in the Jan-Feb-March quarter.
So from Jan-Feb-March, we should see around a 6,000 per month run rate?
You see, it all depends on how many new stores are able to come in on stream. But I would say definitely we would be shooting for 5,000, 6,000 kind of numbers.
All right. We'll leave it there. Mr. Sharma, appreciate you joining in always and giving us a very candid picture of how things are coming along for Bajaj. Appreciate